Hello everyone, welcome to our channel. In this video, we will solve a problem on cost sheet. So the information is given relating to a manufacture of a product during the month of January 2021. We are required to prepare a cost sheet and show prime cost, work cost, cost of production, cost of goods sold, cost of sales and profit. Let us solve this problem. So cost sheet for the period ending January 2021. Production, let us see, units produced is given 20,000 units. So production 20,000 units. Direct materials consumed, direct wages and direct expenses. If we add these three items, we get prime cost. To calculate direct materials consumed, we start with opening stock of raw materials so that we add purchases of raw materials. We also add all the expenses relating to purchases like octroi duty or excise duty, etc. Carriage inwards also. And then we deduct closing stock of raw materials. So let's go ahead and find out whether all this information is available in the problem. In the problem, they have given directly raw materials consumed rupees 20,000. We don't have to make any calculations. So 20,000. Next, direct wages. It's also given direct wages rupees 12,000. Next, we need to find out whether direct expenses are given. The problem does not have any direct expenses. Machine hours work, machine hour rate, office overhead, selling overheads are the only information along with units sold. Okay, so we don't have any direct expenses, as such it is nil. Prime cost will be 20,000 plus 12,000, that comes to 32,000. We can also find out cost per unit. How do we find out cost per unit? Total cost divided by production. Okay, total cost divided by number of units produced will give cost per unit. So direct materials consumed is 20,000 divided by 20,000 units. So that comes to 1 rupee. Direct wages 12,000 divided by 20,000 units, that comes to 0.60. There is no direct expenses. If we add 1 rupee plus 0.60, we get 1 rupee 60 paise, and that is prime cost. Alternative way is to divide 32,000 by 20,000, will be 1.60. Next, we need to add factory overheads. Relating to factory overheads, we have these two information. One is machine hours worked. We have 1,000 hours and machine hour rate is rupees 2 per hour. So factory overheads will be machine hours worked into machine hour rate. So machine hours worked is 1,000 hours and machine hour rate is rupees 2 per hour into machine hour rate. That is 1,000 hours into rupees 2. Now that comes to rupees 2,000. So 2,000 divided by 20,000 units, we will get per unit cost. So that comes to 0.10. Next, we need to add opening stock of work in progress and closing stock of work in progress. Both the information is not available in the problem. As such, it is nil. So factory overheads will be prime cost, that is 32,000 plus 2,000. So that comes to 34,000. Finding out the per unit cost, both these are nil because we don't have the information. And factory cost will be 34,000 divided by 20,000 units. That comes to 1.70. Alternatively, we can add these prime cost plus factory overheads. Also we get 1.70. Next, we need to add office and administration overheads. Let us quickly go through the problem and see whether office overheads are given. So we have office overheads 20% on works cost. So office and administration overheads are 20% of works cost. So works cost is 34,000. So it is 20% of rupees 34,000. Now that comes to 1,800. So total cost per unit will be 6,800 divided by 20,000 units. That comes to 0.34. Total cost of production will be factory cost 34,000 rupees plus the office and administration overhead 6,800. So that comes to 40,800. So per unit cost will be 40,800 divided by 20,000 units. That comes to 2.04. So to the total cost of production, we should add opening stock of finished goods and deduct closing stock of finished goods. Let us see whether these information are available. Now, opening stock of finished goods is not given in the problem. As such, it is nil. We can find out closing stock of finished goods. So how do we find out? Number of units produced minus units sold. So whatever is produced during the year, from that if we deduct whatever has been sold during the year, we get units produced. So whatever units have been produced during the year, from that if we deduct the number of units that are sold, we get the closing stock of finished goods. That is, these are the units that are produced during the year but not sold. We have units produced 20,000 units and units sold 18,000 units. Produced 20,000, sold 18,000 units. That means to say 2,000 units are not yet sold. If it is not yet sold, that means to say they are available in the business as closing stock, right? So number of units, closing stock of finished goods is 2,000 units. 20,000 units minus 18,000 units. Now, how do we value this 2,000 units? For 20,000 units, we have spent 40,800. Okay, so for 20,000 units, the total cost of production is rupees 40,800. So for 2,000 units, what would be the cost of production? So 2,000 into 40,800 divided by 20,000, we will get the cost of production of this 2,000 units that are there in closing stock. Okay, so that comes to 4,080. So 4,080 divided by 2,000 will be 2.04. So how do we get this 2.04? Per unit cost 4,080 divided by, don't take the number of units produced because this is closing stock. Number of units that are there in the closing stock is 2,000 units. So we get 4,080 divided by 2,000, that is 2.04. So how much is the cost of goods sold? 40,800 minus 4,080, that comes to 36,720. So from now on, the cost per unit will be based on the units sold. So how do we find out per unit cost? It will be 36,720 divided by, now we are selling 18,000 units. Okay, as such, this will be 2.04. Please check the video on the format of cost sheet. In that particular video, I have explained in detail how to find out cost per unit. 36,720 divided by 18,000 units. So from here we will be calculating the cost per unit on 18,000 units, that is the number of units sold. That comes to 2.04. Next, let us find out the selling and distribution overheads. So selling overheads is rupees 0.40 per unit. So it is 0.40 into number of units sold is 18,000 units. So that comes to 7,200. So per unit cost will be 7,200 divided by 18,000, or it's directly given anyways 40 by C. So 36,720 plus 7,200, we will get cost of sales. That comes to 43,920. So per unit cost will be 43,920 divided by 18,000 units. So that will be 2.44. Let us see whether profit figure is given or whether sales figure is given in the problem. So we have units sold at rupees 3 each. Okay, so sales figure is given, that is 18,000 units into rupees 3 will be rupees 54,000. 54,000 rupees divided by 18,000 units will be 3 rupees, or anyways it's directly given in the problem. So we know sales, we know cost of sales. Can we find out profit or loss? Sales minus cost of sales will give either profits or losses. So in this case, sales is 54,000 rupees minus 43,920. Okay, so that comes to 10,080. So 10,080 divided by 18,000 units will be 0.56. So students, up to this point, the cost per unit is calculated on the basis of number of units produced. From this point onwards, we take number of units sold. Okay, and anyways, closing stock of finished goods, we find how many units are there and then divide the value divided by the number of units that are there in the closing stock. Okay, so this is how we solve the problem. Hope you all had a pleasant learning experience. Thank you.